Hey, what's going on, YouTube? This is TerrenceRe, and I'm back getting ready to talk. We got a little market action going on right now. So in this particular video, I'm going to go over the some portfolio management tactics, and we're going to talk the markets, and we're going to do all of that right after the buffer. Right now on the screen, I got the S&P 500 E-mini futures. Right now we're down about 11 handles, which isn't a whole lot. Let's see, on the NASDAQ though, we're down almost 2%, 314 handles. On the Dow futures are up, about 0.5%. And then the Russell is down. The Russell futures are down about 10 handles. So what we have going on right now is a classic divergence between the Dow, which is your blue chip stocks, and the NASDAQ, which for the most part is your tech industry or your tech stocks. So now eventually I would think that the Dow would come down a little bit as well, because I think Apple is in both the NASDAQ and the Dow. And for the most part, if you see Apple going down, the market is pretty much going to be trending down. Tesla is giving up some part of the gains that just about have wiped out all of those gains from yesterday, close to it. As you can see, this is a big red candle. This was the big green candle yesterday, and this is the big red candle today. Now, I did see on Twitter, I follow a Market Rebellion. I think that's the Nigerian brothers. If I'm not mistaken, I think that's their Twitter account for one of their trading services or something like that, I believe. And then I seen that there was a reiteration of a sale on Tesla. So it says Citi reiterates Tesla with sale rating, and they got a price target for $262. Price target. I don't know where to get that from. I'm just stating it. I have no idea. And that was a couple hours ago. That was 3 hours ago. So that was before the market opened. And then all of a sudden we see that red candle. So that could be a catalyst for the sale. That doesn't mean that it's going to persist, because it could just be filling this gap right here. Maybe much ado about nothing, or it could be something. Now this particular portfolio, I've been telling you guys that hit that like button, hit the subscribe button. In the link in the comments, you'll see where you can click on a link to Tastyworks, and you can open up an account, put $2,000 in it, and you can follow me on these trades. Right now, this is the first trade of this what we're going to call it, a small account challenge or whatnot. But you can also follow if you have a large account. You just scale up, and I'll talk to you about different ways of doing it, do more contracts or not. So I put a put spread on in the Qs. This is the first trade that I did in this portfolio. So if we go over here to the trade tab, let me see, I got to bring up the Qs, right? And which is QQQ, which is the ETF of the NASDAQ, basically. So it tracks the NASDAQ. So that's why you see right now it's down 1.77%. If you look at the futures up here, down 1.77%, right? So you go over here. I got 45 days to expiration to go. I think I put it on like right at the end of like last year. So I put it on with like 52 days. So I went to the monthly. I didn't want to use this monthly. You would say, what's the difference? See, these right here with the W's on the option chain, these are weeklies. These tend to be less liquid. But in something like the Qs, you can place a trade for the most part. In any expiration, they're going to be liquid. but I like to stay in the monthlies if at all possible. So I came out to the Feb monthly and I put a put spread on. As you can see, I'm in the money a couple bucks. Now, if I had to did this like closer to expiration, like instead of being so far out, 45 days, and I would have did it, let's say maybe 30 days, this would probably already be at my take profit target, which I paid 80 bucks for it. So if we come to the position tab, right over here where it says trade price, you'll see a red point 80. If you can't see it on your screen, if you're looking at this on a phone, it's negative point 80, and it's in red, letting you know I paid for it, right? Instead of taking in premium or selling, and I paid 80 bucks. And so what I want to do, I'm gonna cancel this working order. I'm gonna put I'm gonna put a GTC in. I already had one in, but I want to do one live so you guys can see it. So if you're working a job, if you're not able to, you don't have to sit at your computer all day. I'm gonna show you how to put these trades on, put like how to take profit. You don't even have to watch. You can just, watch your phone and monitor it that way. It's gonna be real. I'm gonna do it real simple. You know, I may do some day trading in it, but it's a small account, so we're gonna try to keep that to a minimum, right? Unless it's like maybe scalping some options or something on an expiration day. So you can see on the open position right here, P&L on the day, 20 it's up 25 bucks on the day. The open overall is up 28 bucks, right? So what I want to do, I'm going to I can do it in different places. I'm gonna click right here, right? And then I'm gonna highlight both, click there, right click, and then you can see Tastyworks already has like, you want to close it out. What profit percentage do you want to take of the trade? And its default's at 50. So if I pay 80 bucks for it, that means the most I can make is 120, right? It's a $2 wide box spread. I pay 80 bucks for it. That leaves a 120 bucks. That means that's the max profit. So how much of that do I want to make, right? I'm not, and some people say, well, I want to make the whole thing. You would have to hold this to almost expiration to get that, right? And that lessens your probabilities of making money on the trade. So if I right click here and I say, let's just say 50%, let's see what it comes up with. It's going to tell you right here. That means I will be selling this at 140, right? If I pay 80 and I sell it at 140, that means that I'm going to take home 60 bucks, right? You can see it right here, 60 bucks profit. I don't want to necessarily hold it to that long. So how I do it is, if I pay 80, I'll take half of that and maybe a little bit more to cover maybe some commissions, right? So maybe like and I already know what the number is. I'm gonna sell it for 124. And you say, why 124? That's about 55% of what I paid. That's $44. 55% of what I paid for the option, which was 80 bucks. And 55% would be $44. So you just add that to the 80, that's 124. So if you buy something to get in, that means you have to sell it to get out. So I'm going to sell this for 124. I'm going to come over here. It's already set up for GTC, which is good till cancel. I click review and click send, and then voila. And if we come back over here to the tab, you're going to see right here that it's working. And right now, if I was to sell it out right now, you can see the mid price is 107. And there we go. So that's how you would set up a GTC order to um close out a trade. Now what we can do, we can go back and you can see this big red candle. Now I want to see it break down and just take off. And say, man, because I believe it's easier to make money when you're selling, right? I will allocate more trades. I just wanted to go over that on this particular video. Um, the market, the tech stocks are selling off. As you can see, Facebook is down um, a percent or so. Apple is down 1%. Amazon is down 2%. Google's down. Microsoft is down. Tesla is down 5%. Netflix is down. Netflix has been getting killed. If you've seen my previous videos, I advise everybody to stay away from Netflix. Nvidia is down and AMD is down. And if you look over here, the IVR, which is your implied volatility rank, which this particular indicator, there are other platforms that do it, but they don't do it quite like Tasty Works. They have their own little way of formula of calculating that. And as you see implied volatility expand out, right? It if it expands and then you sell options, then you try to make money on the contraction, right? So with this particular portfolio, I want to see it. I want to get a little bit more movement before I allocate some more funds, right? Instead of just putting trades on while the market's in the same place. So let's see if we can get a little bit more movement. Maybe we can come into one of these other tech companies, like maybe Netflix or something, and or maybe Apple. We gotta and maybe try to get short some in Apple. Apple might not be a bad play. I want to see the vol. I want to see the IV rank in Apple get up over 30 before I take a look at maybe, selling a call spread or something like that. And so hit that. Also hit the little bell icon so that way you'll be notified I do a trade. Now, what I will say is I'm not a financial advisor or anything like that. So all these trades, you own them. You take them at your own risk. Trading is risky. You can lose money. And so you just gotta, but you can also make money. So, that's the thing on that. There's another, I did want to talk about AT&T and Verizon. So AT&T and Verizon have agreed to wait on the 5G rollout. And the only reason why I do that, I do own AT&T in another portfolio, and I own AT&T. I've been watching it. It's been getting killed. If you look at it over the past year, look at it. And so you say, well, why would you buy it? I want to buy it when it's down. You got this little double bottom right here. So look at this. It's a classic double bottom right here. So you had a down, you had a low, broke back up, came right here, and then gapped up, right? So yeah, I got into AT&T, and not only does is I like the pattern that I see down here at the bottom, but AT&T, not so much that I'm looking. It's not a growth stock, but this is the thing. AT&T pays a dividend of 52 cent, guys. 52-cent dividend for a $25 stock. That's crazy, right? So that's something right there. And if I'm not mistaken, they're going to pay out the dividend on the 7th. I don't know what date what that may be the ex dividend date. That may be the date that you have to own the stock by in order to get it. So I'm not quite sure. I might have to look into that. But I've already had it for a while. So that's one of those things like AT&T. If you have like a retirement or something like that, your 401k, and you're managing that, maybe a different type of portfolio that you're not. It's maybe not a great trading vehicle, but something to have, long term. It's a old company. If AT&T goes somewhere, last thing I can see, maybe joining with another phone company or something like that. Or so, but anyway, I just want to talk about that, and hope you guys got something out of the video. Hit the like button, hit the subscribe button, share it, comment, put something in the chat like of what you want to see me do, what trades you want to see me do. I'm telling you, I'm gonna do them all. It's just gonna take a little time. We're gonna take our time with this. I'm gonna do butterflies. You're gonna see butterflies. You're gonna see broken wings. We're gonna do everything probably in the next trade I'm gonna do is probably either an iron condor or either we're gonna sell a call spread. If I see some more selling going on in the market, and I can see these, if I can get these vols to get up, the Qs is already up over 30, but we have a put spread there, so I want to kind of spread it around. Maybe we'll take a look at the bonds, which is selling off a little bit. We got a 43 IV rank, so I will be taking a look at selling some premium, and then you guys will get a chance to see what that looks like, and some portfolio allocation and some portfolio management. And with that, I'm out. Peace.